You're listening to Agriculture Today here on the K-State Radio Network. It's our Friday edition, and we're glad to have you along with us. Into the grain markets we go, a place that's not for the meek, that's for sure, given the rampant volatility in these trades that persists. And we're talking once more now with grain market economist Dan O'Brien, K-State Research and Extension, from his office in Colby, Northwest Kansas. Given all of the movement in these markets, though, Dan, and we'll open with this, you suggest that maybe they're starting to establish something resembling a trading range.
It sure seems to be so. Pardon me. In at least in the past, as we've observed, very volatile, driven higher markets, as we've seen, that will tend to run up in prices, and then once we got to a place where we have I guess momentum fatigue, then we have tended in past either to crash altogether if we found out that the underlying assumptions that we thought were on supply demand that were driving these markets are false, or if they hold true, we tend to go into a trading range. Just interesting to see, since we've ran up in say May corn, that we've traded in a range pretty much of 725 to 775 and closed yesterday almost dead in the middle of that at 754. For wheat, when we've run up, we've gotten into a trading range of about 1050 up to, on the very top, about 13, closing towards the lower end of that. Yes, as of yesterday at about 1092. But and we've seen a whole lot of volatility just within the last week in the wheat market, but we're still within that trading range yet, where we've been at. We look at soybeans, we've ran up into the trading range of about 15 this is for the May contract, 1575 up to a high of about 1760. Closed yesterday again almost right in the middle of that at about 1668. So again, you look at these markets, a lot of volatility. News comes out, people are reacting to whatever's hitting, but in a way, it's almost, I wouldn't say it's comforting, but it's somewhat reassuring that we're in a trading range. We know we have issues on the supply demand side in the world markets, a lot of it caused by what's happening between Russia and Ukraine, but also some South America issues, also some issues for palm oil off in Southeast Asia, of all things that would affect us, but it is affecting us. So we've got trading ranges established. We have volatile markets, but we're tending to find, it seems like, some consistency in the futures, even at these high levels.
Dan, these remain, again, as has been talked of repeatedly, inverted markets, and that's indicating immediate demand out there. And this is being reflected in the market carry, as you've observed it.
Yes. When you look at the corn futures complex from the leads into the deferreds, it looks like for the March, we have the May contract right now in the lead, and March has gone off the board. May contract, again, trading at 754.5 yesterday, as we talked about. D's trading at about 645, and you've got monthly declines, again, i.e. an inverted market from during 2022 on these contracts, from May to July, about 18 cents a month, inversion from July to September, about 26 cents a month, and even from September to D's at about 7.5 cents a month. But what I find interesting is that you go beyond D's and look at that next year. It looks like the market is trying to come into some settled structure. There's actually a slight positive carry. It's almost comical in that March is at 645.25 yesterday, May at 645.5, and July is at pretty similar, just down a cent or so. So anyway, we're trying. It seems like we're trying to move beyond the issues of this year and trying to look out into that next year, and are anticipating a more stable market situation. And then, of course, once you get from July at 643.75 down to into September at 5.90, you've dropped 40 cents, looking at more of a normal harvest situation. So that's of interest there. The market that was really causing the fireworks, though, is the wheat market. And when you look at that, we still have I think that the position of the futures tell the story of the expectations of how the market thinks will unwind, what the market is voting right now in terms of prices, how it thinks will unwind this current supply demand situation that we're in. So again, May closed yesterday 1092 and a quarter. Then July 1083, September 1058, D's 2022 1033. So you're losing about 10, from 4 to about 12 cents per bushel per month on down through that marketing year. But then it's kind of opposite of corn. Then you're heading off into March of 23, May of 23, July, and particularly going March to May, you're dropping 31 cents a month. From May to July, you're dropping 62 cents a month per month in that, and moving down a little bit then into September. So it seems that the market's anticipating that our current troubles will resolve themselves out there into 2023, that we'll plant a crop, that we'll be able to harvest it, and they're anticipating a fall off into that harvest of 2023, all that much more than what they're even looking at now for this year. I should add in soybeans too while we're on this. Again, it's interesting to see from May to July, a drop off about 10 cents per month, but then you go from July to August, 43 cents, from August to September, 81 cents, and 81 cents in 1 month. And then from September to November, about 26, 27 cents. So it seems that the market, the grain markets through their futures bids are anticipating that by the time the U.S. crop comes in, they're thinking that, they're indicating that they think prices will fall off pretty sharply into the fall of although they'll fall off pretty sharply. They're still, like November is still 1469 as on yesterday's close, but in terms of the relative position, they're looking at prices falling lower off into harvest. We get a new crop, a good harvest coming in the United States, and that would affect the market in a downward manner. Still tremendous price bids, and we see that actually off in the new crop bids too. So still high prices, but these patterns are showing, I think, what the expectations of the market are as we try to unwind things the next 12, 18 months.
It's interesting. Bears watching for sure. What are you seeing on the local cash grain bid scene around Kansas, Dan? Anything out of the ordinary from what we've recently witnessed?
Well, ongoing strength in Southwest Kansas and cash corn bids, and even in grain sorghum bids, whereas you have a 46 cent positive basis bid yesterday for the spot price in Garden City. And then the next best basis bid was 18 under at Hutchinson. Most of them are running 30, 29, 30 under, 36 under. There's probably the weakest basis bid, spot basis bid, is in around the Salina market, at least that I could see, at 54 under. So anything but a level corn market across the state. You have a lot of variability, and especially in that demand center down southwest Kansas, you really see that. That's probably truckable, haulable, transportable price differentials if people have grain to go search out these differences. But again, you're limited by miles in doing that, but still there's some huge price differences around the state of Kansas. Soybean basis bids, you can see at Topeka in particular, a strong spot basis bid, still over $16 for cash bids in Salina and Hutchinson, but then you break down closer to 1550, 1570, 1590 something as you head to other parts of the state. Weakest in Northwest Kansas for soybeans anyway. And then really for wheat is we've been haranguing over wheat prices, wheat bids, wondering where things are going. The top bids in Salina, Topeka, Hutchinson, the export oriented markets, about $10.50, $10.53, something like that. And then you move down to around 10 to below 10. Once you get into Colby and Columbus, different polar parts of the state, and Garden City, still closer to 10 at about 10, 13. So again, we're really seeing differences in the state based on what the demand centers are for these crops. And it's just really expressing itself.
Right. Do want to finish up with a quick glance to the latest from the grain export records, if you will. Corn and soybeans doing okay, but wheat continues to drag its heels, and one wonders if it's priced out of the market to a certain extent. What's going on to your thinking?
Well, to the chagrin of the wheat organizations in the state, we haven't had strong wheat exports yet. Now, with the problems in the world, particularly in the concerns about Ukraine and their ability to get a crop out, what could happen with Russia and their ability to trade, you've got a lot of concern around the world, pardon me, with regard to having adequate wheat supplies. But that doesn't seem yet to have expressed itself in stronger U.S. wheat demand. We're still, as of the latest USDA Foreign Ag Service numbers that come out representing the situation on March the 10th, we're about 86% of the way in terms of what's been shipped and bought ahead to the USDA's 800 million bushel projection, and we're about 79% of the way through the marketing year. So that's almost, it's not hand to mouth, but it's not far ahead. You know, people are buying their needs as they go. Of course, that shows that could change if they have needs quick enough. Compare that to corn, and of course, that marketing year starts September 1. So we're about 52% of the way through the marketing year, about 82% of the way bought, you know, shipped or bought ahead for corn. And for grain sorghum, about 88% of the way shipped or bought. And again, 52% of the way through. For soybeans, we're 94% of the way shipped or bought towards meeting the USDA's projection of 2.09 billion bushels. And again, we're 52% of the way through the marketing year. So at least as we sit today, before really anticipated demand comes into the wheat market, we've got the other markets, corn, grain, sorghum, soybeans running a bit ahead of wheat in terms of the export market and what's quote on the books to be shipped yet.
Well, who knows what another trading week will bring, but whatever it might be, Dan, we'll talk about it when we get together next week once more. Many thanks to you as always.
Thanks, Eric. Take care.
On the grain markets, Dan O'Brien, grain market economist, K-State Research and Extension, and we've been drawing from his weekly notes on the grain trades and the factors influencing those, and you can have a look at those in full at agmanager.info. You're listening to Agriculture Today.